I know you've got a big position. In fact, I think it's your biggest position in the European banks. We've had a mixed bag, I'd say, of results out this morning. You're still feeling pretty strong on that conviction?
Feeling strong. I know it's going to be a very volatile position. It's incredibly cheap. It's under-owned. It's a big short, and for good reasons historically. I think over the last 3 years there's been a lot of issues with the European banks. And I think a lot of those issues, though, have been addressed over the last few weeks with the asset quality review, the stress test, the ECB overseeing all of the European banks. Those were big questions, and I think we're getting towards answers now. And Commerzbank's results this morning, I think, showed something that's going to be a bit of a powerful tailwind for banks in coming years, is their loan loss provisions. Basically, nothing's changed. They've just accounted for them a little less harshly than they had in the past, and that can be a big earnings tailwind, that if you don't see explicit defaults on these loans, you get a positive tailwind in terms of future earnings.
Let's throw ECB into this, because, of course, what they do is crucial. Are they going to follow through? I mean, do you really think it's going to happen, and when do you think it's going to happen?
I think it's going to happen, but as everything happens in Europe, it doesn't happen as quickly as you'd like. I think if Mario Draghi was in charge and doing this himself, it'd be happening very quickly, but as you've already alluded to, it creates a bit of dissatisfaction among colleagues if you don't come to a consensus decision, and that slows things down. So nothing happens until it's imminent disaster, and that's when Europe tends to act. We think that will happen over the coming quarter, that you'll get so clear deflationary pressures, no inflation at all, slowdown in economic numbers, that you do have to build the ECB's balance sheet back towards where it was in 2012. It can't compete if it doesn't with other currencies.
I see you're also buying European consumer companies, and this is critical, I guess, given the weakness of the euro. Companies like Hermes, which of course reported today, I mean, the growth isn't great, but I guess it's great when you take the euro into consideration, right?
Exactly. I think Hermes alluded to 2% volume growth, and that's minuscule, basically. But if you take in the fact that they're getting Asian consumers, US dollar revenues, that can be a pretty powerful tailwind in euro-reported earnings and dividends. So we don't own Hermes, but we own LVMH, which is a similar play. It's a different valuation, but the weak euro is a big tailwind for multinational companies domiciled in Europe.
And you're short US equities quickly, right?
We're short U.S. equities. That's a valuation play. We think we had the Bernanke put and the Fed put in the past, and I think that's starting to dissipate as they're ending their QE. But I think the ECB put is going to come into play, particularly with the financials. And if you buy those cheaply, we think the ECB is going to be behind those, and they're trading below tangible book value. So that's a contrarian value play.